Good afternoon, everyone. We are welcoming you to the Sustainability Reporting Standard Board's webinar on building financial resilience, strengthening NPOs for sustainable social impact. We have with us our chairperson, vice chairman, and regional council members of CIRC and distinguished speakers. Now over to you, Sir C. Akash Bagrotia ji, Chairman CIRC, to start the webinar. Over to you, sir.
Thank you, Shweta ma'am. I wholeheartedly welcome all the participants for this webinar on building financial resilience, strengthening NPO for sustainability, social impact. And I think this webinar will provide all the participants with a strong understanding of sustainability reporting standards as they apply to NPOs and various other entities. And I also welcome Shri Priya ma'am, Central Council member, Chairperson SRSB. Also welcome the Vice Chairman Dr. Anuj Goyal ji, Vice Chairman CRSB ICAI, and also welcome the three resource persons for today's webinar: CA Kamal Garg ji, CA Mithul Shah ji, CA Ravi Kant Mariala ji. Before I invite our chairperson Shri Priya ma'am, I would like to give a brief about our Central Council member. Shri Priya ma'am is a Central Council member of ICI, chairperson of the Sustainability Reporting Standards Board, and the director of the Institute of Social Auditors of India. She also serves as the vice chair of the Corporate Laws and Corporate Governance Committee and the Professional Skills Enrichment Committee of ICI. Over the last few years, she has served on various committees and boards of ICI, making noteworthy contributions to the Corporate Law Committee and Experts Advisory Committee. She is a registered insolvency practitioner and leads the corporate restructuring and insolvency practice. She was part of the working group constituted by the MCA for drafting the rules and the regulations of the bankruptcy and insolvency code. Additionally, she is a regular faculty member in a training program of ICI and other accredited institutes having delivered over 300 lectures. So, with wholeheartedly, I welcome Shri Priya ma'am for her welcome note.
Thank you very much, Akashji. On behalf of the Sustainability Reporting Standards Board of the Institute of Chartered Accountants of India, I take great pleasure in extending a very, very warm and a very hearty welcome to you all to this webinar on accounting for NPOs. That's basically what we are going to talk about today. Also, wish to place on record my sincerest appreciation to CA Kamal Garg for having come here to address this program. Would also like to welcome, and of course, there's no welcome really needed, Dr. Dr. Anuj Goyal, the Vice Chairperson of the Sustainability Reporting Standards Board, and the Chairperson of the Ethical Standards Board, and the Professional Skills Enrichment Committee of ICAI. So in terms of the SRSB of ICAI, we primarily do two activities. One is on ESG, integrated reporting, sustainability assurance. And the other part, that's a big chunk of the work that we do, is also about social stock exchange. Now, what's the social stock exchange? It's a stock exchange that's been set up where NGOs can get themselves registered and listed and issue something that's called as a zero coupon bond, which is to collect donations. Now, somebody might ask, look, I'm already getting CSR funds. So why should I go to the stock exchange? The stock exchange gives you credibility. It helps you to actually build investor confidence. And so the government is promoting social stock exchange as a mode and a medium for funding NGOs. Now, what's very important in this context is we are a country with a very large number of NGOs. If you go to the Dharpan portal, you'll know the total number, which is fairly large. And for a country like India, for a developing country like India, no amount of NGOs are enough because there's only so much the government that can do in terms of the last mile reach, which the NGOs can provide. And as chartered accountants, we have two roles to play. One is the traditional audit role, the income tax, the exemptions, etc. The second is a much larger business advisory role that you can play in the context of NGOs. And third, of course, some of us might want to become social auditors or social impact assessors as well. But in terms of this entire NGO funding and compliance landscape, I think it's really large. And today, what are we going to talk about? We're going to talk about the context of building financial resilience for NGOs. And we have with us CA Kamal Garg, who's here to speak about it. And in the coming series, the primary objective of the board will be to try and see how we can help you to identify professional opportunities, especially in the sustainability and the NGO space. And how do you actually manage those professional opportunities? Whether it's sustainability assurance, or whether it's consulting, or whether it's compliance or accounting for NGOs. So, with this context, I'd like to hand the floor back to Akash. But before that, I must also place on record my appreciation to CA Akash, CA Ravikant, CA Rajiv Gupta, and CA Mitul Shah, who are here with us today to actually enable this program. So thank you so much, Akash, and it's over to you.
Thank you, ma'am. Thank you for your welcome address. And now, before inviting another Central Council member, CA Dr. Anuj Goyalji, I would like to give a brief about sir. CA Dr. Anuj Goyal is a practicing chartered accountant and a Central Council member of the ICI. He is one of the youngest Central Council member from the Central region. He has also served as a chairman of the Ghaziabad chapter of the Institute of Company Secretaries and the Institute of Cost Accountants of India. He has made a significant contribution to the profession with the extraordinary tenure of 17 years in the Central Council, 3 years in the Regional Council, and 6 years in the branch, including chairman of Central India Regional Council, chairman of various ICI central committees, member of the editorial board, and so on. He is currently the chairman of Ethical Standard Board, the ICI's oldest technical committee constituted in 1976, as well as the chairman of the Professional Skills Enrichment Committee and Publication and CDS Directorate. His contribution in the field, research and development have always been remarkable. In the capacity of chairman of the research committee, ICI, he has conceptualized and introduced various initiatives to foster the research environment like international research awards, research project schemes, doctoral scholarship schemes, which was benefited largely number of academic scholars, not only in India, but globally. He is a prominent figure in the profession and has shared knowledge as examiner, paper writer, speaker on various topics, and also as a visiting faculty members of various institutes. So without wasting any time, I would like to invite CA Dr. Anuj Goyalji for his keynote address.
Thank you, CA Akash Bargoti sir, our event enabler and the chairman of Central India Regional Council. We are having the presence of our Honorable Chairperson of Sustainability Reporting Standard Board, Sri Priya ma'am. And I think the way she is contributing in a great way, something really great. We are having the presence of CA Kamal Garg, who is a very prominent resource person and is contributing in a great way for the cause of the members, for the cause of the profession, for the cause of the future chartered accountants. Has authored hundreds of books on various important topics, including accounting standards, auditing standards, social audit, and each and every topic related to the profession. And we are really fortunate that we are having Kamal Garg sir, we are having Ravikant ji and Mitul Saji as resource person. We are having the presence of the event enablers, our very prominent leaders of the profession from Central India Regional Council, my brother, the Secretary of CIRC, CA Nitin Gupta ji, of course, CA Rajiv Gupta ji from Meerut, our commissioner, and the Sikasa chairman, and of course from the Pink City, Jaipur, our chairman of Central India Regional Council, CA Akash Bargoti sir. Once again, I welcome you. And of course, Smita Goyalji, Secretary SRSP, and all our honorable respected members who are with us from each and every part of the country as well as outside the country. I welcome once again all of you. I think through this Sustainability Reporting Standard Board, we are supposed to really help out the members at large in a great way, And we know that sustainability is a buzzword, and India is pioneer. And Institute of Chartered Accountants of India has taken lead. I'm really grateful to our honorable speakers, Kamalji, Mitulji, and Raviji, that they are trying to handle our best of the chartered accountants who are having the capacity to unlearn and relearn. And I think this is the USP of my chartered accountants. And now you know that as a social auditor, chartered accountants can be the social auditor. Any other professional can also be the social auditor. But I'm really very happy to share with all of you that our honorable members of the Institute of Chartered Accountants of India has taken the lead, and practically the chartered accountants are synonymous to the social auditor. We are very well aware that as far as the social auditors are concerned, this examination is not in the hands of the Institute of Chartered Accountants of India, but our committee as well as Institute of Social Auditors, which is the practically the brainchild of the Institute of Chartered Accountants of India, accepted special purpose beacon. Through that, we are trying our level best to see that how we can really produce best of the social auditors, and our honorable members of the Institute of Chartered Accountants of India are really coming up to the expectations in a great way. And we are very well aware that now the things are moving from the financial audit to the social audit, and the role of the chartered accountants is really great. And the financial impact maybe not so important now for the society, for the country, for the world, but the social impact of any organization and the activities of the organization is very important. We have just witnessed that one very prominent city, Cape Town, from the South Africa, is now one very big city, which has become the waterless city of the world. And you can very well understand that we have to be very careful. I think this is the challenge before the mankind, that how we have to assess the social impact of the activities of any entity. So the role of the Sustainability Reporting Standard Board is very important. Role of all of you is very important. Our institute is trying its level best. Sri Priya ji, who is the chairperson, is putting her best to see that how we can really do something very concrete in this field with the help of the our best of the chartered accountants. And I'm quite confident that when we are having the resource persons like Kamalji, Mitulji, and Raviji, we will be certainly enriching our best of the chartered accountants in the best way. And I'm quite confident that as far as this very important topic is concerned, we this NPO sector, financial aspects of the NPO and listing requirements, social stock exchange, I think it is very important how we can build the capacity of the NPOs, and how each and every person of the society can take part in contributing as a stakeholder, as a shareholder in the each and every NPO by getting them listed. That the role of the chartered accountant is very important. I will not be taking your further time, as we are very keen to hear the learned views of all the three speakers. And I am quite confident that we will be able to gain the knowledge and expert views on BRSR reporting and assurance aspects also. So I once again welcome all our honorable resource persons, Kamalji, Raviji, Mitulji, and our event enablers, the leaders from Central India Regional Council, Chairman Akashji, Sikasa Chairman Rajivji, Secretary Nitinji, and all our honorable respected members who are present here from each and every part of the country, outside country also, and the Secretary SRSP, Sweta ji, and Manish Goyal ji, for being very active. So thank you very much. Over to Akash sir. Thank you very much.
Thank you, Anish sir, and for letting us know the importance of the sustainability reporting. And now it's time to listen to our resource persons. And for this, I hand over to Shweta ma'am for the continuation of this session. Over to
Thank
Shweta.
you, sir. Thank you, sir. Sir, we would like to now welcome our guest speaker, distinguished speaker, CA Kamal Gauji. He is a fellow member of ICI, holds a first-class commerce degree from the University of Delhi. He is a registered insolvency professional with the Insolvency and Bankruptcy Board of India and is a DISA qualified. He has also completed the certificate course of BRSR conducted by ICI and the social auditor examination conducted by NISM. Kamalji is having served on various committees and boards of ICI, including the ASB, FRRB, and the Ind AS Implementation Committee. He is a resource person for the Peer Review Board, Corporate Laws Governance Committee, and the Committee on Financial Markets and Investor Protections of ICI. He is a regular guest speaker for IFRS MDPs at various forums, including ICI and ICSI. He has authored numerous books and articles on various topics, including IFRS, India's concepts and applications, Audit Trail, a practical guide, concise commentary on Companies Act. Kamalji is having a industry experience in corporate laws, audits, and management.
Very sorry to interrupt. I think we should start and we should not.
Yeah, over to you, sir, please.
Thank you, Shwetaji, and good afternoon to each one of the listeners. I'm really glad to see Sri Priya ma'am, the chairperson of this board, and see Dr. Anuj Goyalji, a learned fellow, and my big brother also, big senior also, and a man of great stature. I'm also glad to see my big brother, Sri Rajiv Gupta ji, my invisible brother, Sri Nitin Gupta ji, and the new brother, Sri Akash ji. I welcome you all, and please accept my wishes also. I'm also glad to have the co-speakers with me, CA Mitulji and CA Ravi Kanji, and please accept my wishes to both of the speakers. Before I share my screen and discuss the topic given to me, so let me brief you that I will be discussing my topic into two segments. One is your resilience, and second is your listing on social exchanges. But before I proceed further, let me raise few questions. Although the topic is very clearly chalked out, but the problem here is, are we discussing NPOs for the first time? I believe India is having a long history of NPOs. Then what is the need of this topic today? Is it something new or is it something in transition? To my personal understanding, the NPO concept is old, but the mindset needs to be new in present times. Why I'm saying the new mindset is required? Because over a period of last 40, 50 years, the dynamics have changed, the economics has changed, and the ways the laws are being kept on NPOs also have undergone a change. So I'll discuss these two topics, and after finishing my discussion, we all the three speakers, me with my fellow speakers, Ravi ji and CA Mitulji, will be happy to answer your queries also. So let me share my screen, and I will take up the first segment of my topic, that is building resilience for NPOs in financial way. So Shweta ji, please confirm once my screen is visible. Shweta ji, my screen is visible?
Yes, sir.
Okay, thank you.
Yes, sir.
So this is the first segment of my discussion, building financial resilience for NPOs. So first of all, we need to understand what is financial resilience, and especially the word resilience. So for that very purpose, let us move on. So as a matter of ice breaking, what I would say, in the shifting and often unpredictable non-profit sector, financial resilience emerges as cornerstone of sustainability and growth. Now, as I asked you the very first question over here, what is this resilience? So generally the common myth is that resilience means the existence as on date, the sustainability as on date. It is not like that. Just have a look out over here. What primarily resilience signify? So resilience of NPO is not just about surviving the present. It is about strategically preparing for the future, ensuring that the organization can continue to fulfill its mission effectively, irrespective of financial climate. This irrespective of financial climate is very important. Why I am saying so? In most of the cases, the NPOs survive on private donations. Now, there could be a scenario that the sentiments of normal public may not be in favor of NPOs, and they may not be getting good donations for that matter. And if you are not having donations, you are not having funds, then how you will be able to accomplish your mission? And that's the reason that this resilience need to be understood not in letter but by spirit also. That irrespective of financial climate you are into, how far you can accomplish your mission, not only in present times but in future times also. Please try to recollect those very pandemic years. In those pandemic years, there were not too much of, climatical sentiments to donate. And in that very sense, the NPOs were facing not only the economy risk, but also the revenue risk. In such a case, how the NPOs had survived, that lead to a new generation of a word, that is resilience. So primarily, what you need to understand, the Indian NPOs face a unique set of challenge. And when we face unique set of challenges, obviously you have to have unique set of opportunities also. What NPOs are facing in India as a matter of challenge and opportunity? First is the complexity of navigating funding avenues. Now, when I say funding avenues, as I make a ice-breaking expression of the words private donations. Second, we can have government subsidies also, government grants also. Now, one more wing is added, that is social listing. We'll discuss in detail social listing after a while. Second set of challenges and opportunities do come from another element of complying with multifaceted regulatory requirements. So we can have regulatory environments from Income Tax Act, we can have the regulatory environment from Companies Act like CSR contributions, we can have FCROs. FCR stands for Foreign Contribution Regulation Act. Then other element could be responding to increasing needs of diverse communities, and it requires a nuanced and strategic approach to financial management. Now, in India, we know very well the needies can have a diverse portfolio. We can have people who are poor. We can have people who cannot afford education. We can have people who are deprived of good medical facilities and so on. So depending upon these diversified needs, we need to have a very, peculiar type of approach towards financial management. Having said that, we need to understand what can be the possible steps towards building financial resilience. So I would say primarily at a macro level, we can have these 6 steps if we want to build financial resilience. I'm not saying that these 6 steps are exhaustive, but yes, they are macro level steps and may encompass many other sub elements also. First one is diversifying revenue streams. Second one is crafting a financial contingency plan. Third one is building strong relationships with donors and stakeholders. Fourth one is embracing technology and innovation. Then is promoting financial literacy and training. And last one is ensuring regulatory discipline. Let us discuss these 6 steps minutely in subsequent slides. First one is diversifying revenue streams. As I told you that we have to sustain not only in present times, but in future times also. And for that very reason, the consistent flow of revenue is important. Having said that, we need to understand by exploring a variety of funding sources, including government grants, private donations, corporate sponsorships, and revenue generating activities, NPOs can create a financial safety net. What NPOs need to understand that they need to come out of the age-old concept of donations only. There can have multiple revenue streams, not only the government grants or private donations, but corporate sponsorships also, and other revenue generating activities also. For example, if you are running an NGO which provide medical facilities to poor or medical facilities to those who cannot afford good medical facilities, in such a case, the question arises, what can be the revenue generating activities? The revenue generating activity could be, for example, if you have a big piece of land and on that piece of land you're running your activities, you may provide that land for some corporate functions, for some parking and so on. So you need to explore what I could, as NPO governing board, inculcate alternative or supplemental revenue streams. Then is when you have these multiple revenue streams or diversified revenue streams, what will be the impact? The impact will be hedging impact, meaning thereby this diversification will serve as a hedge against the volatility of any single income source. Secondly, we need to craft a financial contingency plan. I believe the best example as of now is those pandemic years, 2020 and 2021. So the NPOs were even facing contingencies. And in that very sense, had they had financial contingency plan of a sound nature, the things would have been in a different way. So comprehensive financial contingency plan is critical for any NPO seeking to safeguard against financial downturns. Such a plan should clearly outline actionable strategies for cost reduction, criteria for accessing emergency funds, and protocols for communicating with stakeholders during crisis. Now, please see these words, protocols for communicating with stakeholders during crisis. I believe one of the protocol could be technologically enabled protocol. We will discuss this technologically enabled protocol in a while when I will come to that technical innovation. But yes, we need to have a very well sound crafted financial contingency plan. Then is building strong relationships with donors and stakeholders. Normally, it is a practice being seen and observed and experienced. NPOs will take donations, then they will start spending the donations for the needy, but they will lose a kind of relationship bridge with the donor. And this way what happens, the donor loses the confidence in the donee, that is the NPO, and this results in the sentiments to donate getting impaired. This should be avoided. And how to avoid it? For this purpose, we have to develop an approach. And what kind of approach needs to be developed? We need to develop an approach which will ensure engagement. That is regular updates, community consultations, and transparent reporting, etc. Just see the words transparent reporting. So for example, if I'm a donor, I donated rupees X to NPO, don't you think I would be eager to know whether my money is being utilized properly or not? Whether my money is being spent for the purpose of needy or not? Now, what happens in most of the cases, I will donate, but after donation, I'm not getting any feedback as to whether my money is being spent properly or not. For this very purpose, the suggestion from my side is that the NPOs need to build a strong relationship with donor. And one of the criteria to build this strong relationship is transparent reporting. And for this transparent reporting, obviously, the financial reporting can help. Obviously, some certification can help, and so on. Now, what will happen when this kind of strong relationship is built up? This will help to mobilize support effectively during times of need. And what we need to understand, this strong relationship is also a part of sound financial contingency plan. I can always look forward to those donors with whom I do have a strong relationship. Further, embracing technology and innovation. So strategic use of technology can significantly enhance fundraising efforts, operational efficiencies, and community engagement. Try to recollect, as an example, those pandemic years. In those pandemic years, you may be remembering one of the film stars, Sonu Sood. He was engaging with the community for the purpose of their transportation and look after. And for this very purpose, some kind of apps were developed. And those apps helped in operational efficiencies. So always when we say embrace technology and innovation, this could lead to some kind of significant results, which can be in a way synergized, not only with the donors, but with the community also. Now, by adopting these innovative tools and platforms, non-profit organizations can expand their reach and adapt more swiftly to the changes in the landscape. Now, what kind of technology needs to be developed? That depends upon NPO to NPO and their mission also, as to what community they are going to fulfill. For example, you must have heard, especially in North India, during the winter season, there are many such kind of NPOs who will approach various donors through technology-enabled apps that if you want to donate blankets or woolen clothes, then they can fix an appointment on our app. The person will come to collect these woolen clothes and will be donated to various needies. So these kind of technological enabling scenarios can obviously help the NPOs to develop a kind of a goodwill and acceptability in the community. Then promoting financial literacy and training. Now, financial literacy empowers individuals within the organization to make informed decisions and contribute positively to its financial health. So what kind of financial literacy and training could be leading as an example? For example, if you're a financially literate person and you know how the finances are being reported and managed, it will help in having a control over utilization of funds, proper tax planning, that is taxation matters, and stakeholders appraisal also. Many a times it happens that as a donor, I will always want that NPO must inform me whether my funds are properly utilized or not. For that very purpose, the NPO would be able to inform me properly only when the financial literacy is at culmination. Let me give an example. We must be aware about CSR rules. Now let us take a situation like this. XYZ Limited is a company, and on this XYZ Limited, CSR is applicable. So what XYZ Limited did? XYZ Limited made a CSR contribution to one of the NPO as implementing agency. Let us say the name of the NPO is hypothetically HelpAge India. Now what happened? This XYZ Limited donated as a matter of CSR contribution to HelpAge India. Now obviously XYZ Limited wants utilization of whatever contribution has been made to HelpAge India. HelpAge India needs to give a utilization certificate and a statement that yes, whatever funds you contributed to me are properly utilized. And what you need to understand, under CSR rules, the director of finance or the CFO of XYZ Limited also need to give a declaration and a certification that whatever CSR funds have been contributed, they have been properly utilized. So for that very purpose, what I will do, if I am the CFO of XYZ Limited, I need some kind of a transparent reporting and a certification. So the chartered accountant, maybe of HelpAge India, could be providing me a certificate on behalf of HelpAge India so that the certificate can be used by me as CFO of XYZ Limited to be submitted before the board. So this certification scenario, this utilization scenario is possible only when there is a good financial literacy. Further, as an NPO, you have to ensure regulatory discipline, and this regulatory discipline ensures resilience always being smoothened, being always streamlined. Now, why regulatory discipline is important? A non-compliance may dent the whole mission. And what prominent non-compliances are there? There can be many, but the prominent non-compliance could be non-compliance of CSR provisions as enshrined in Companies Act, non-compliance of taxation laws, and non-compliance of FCRA, Foreign Contribution Regulation Act, when the NPOs are getting donations from outside Indian territory. In such a case, what will happen? You know very well that compliances do take a toll if these are not carried out. So we have to have a regulatory discipline also to ensure the resilience on financial part of NPO. Having discussed all these steps to ensure financial resilience, the other issue is whether NPOs are free from risk. Answer is a big no. NPOs also face risk. And if I give the macro level view of what risk they face, there can be many risks, but the macro risk can be divided into 4 categories: compliance risk, cyber security risk, fraud and appropriation risk, and theft risk. To discuss one by one, compliance risk can take an example. In order to maintain their tax exempt status, in order to maintain their tax exempt status, NPOs have to present detailed audits of their financial activities to prove that they are using their money for charitable purposes. Then comes to cybersecurity. NPOs collect large amounts of sensitive data from their donors and supporters. Any breaches of private data could be disastrous for them. I can give you one more example. In last August, Digital Personal Data Protection Act was notified, although it is yet to become enforceable law because rules are awaited. But if personal data, sensitive data is collected by NPOs and it is breached, it may lead to some kind of toll by virtue of DPDP Act also. DPDP Act means Digital Personal Data Protection Act. That is fraud and misappropriation. For example, a few common fraud schemes include billing schemes, where a dishonest employee sets up a fake account that bills for bogus services and uses the money. Other could be using the organization's name to collect donations. Other could be kickbacks, etc. Theft. The large amount of cash and check donations NPOs receive and the inadequate screening and or low pay of people handling that money presents a big risk for NPOs also. So let us take a situation. The people may come in a group nearby some festival season and they may ask you some kind of donation. Now, they may give you a cash receipt, they may collect the money from you as donation, but who knows whether this money being collected will be deposited as such intactfully to the concerned NPO. So there is a chance of money getting theft. And then there could be a question about the authenticity and the validity of the people who are coming to collect the money as donation. And for that very purpose, the problem could be identification procedures, authenticity procedures, and more importantly, ensuring good internal controls vis-a-vis the NPO. Let me check the chat box to see some questions. I have one question from Chindoji. strengthening NPO for social causes. How we different with social impact? See, when we say social causes, so let me give an example. Social causes that children below 14 years are not getting good education. Now you took a mission that yes, I will educate the children so that they can have the basic education, especially for those who are below 14 years of age. Now, after 1 year, what you found that the children are educated. Now, when children are educated, that's a social impact. So, cause is the breakthrough takeoff. Cause is the breakthrough takeoff. Social impact is primarily the output. And I must say, without social impact, social cause is irrelevant, and without social cause, social impact is irrelevant. So both will go in a synergized way. Other question is, building financial resilience defines what basis we can give priority. So that priority you need to decide on the basis of community you're going to serve. And then step number second is community you're going to serve and the resources which you are having on the basis of which you can serve. So you have to make a balance between the needs of the community and the resources you are having. So I think Mitulji is also having this answer in the chat box. Mitulji is writing social causes, for example, skill development, youth training, and empowerment are par with social impact. And I must emphasize one thing here. If you refer CSR rules, and if my memory serves me right, I think rule number 8 of CSR rules categorically states that for certain class of companies, social impact assessment report is required. So if I'm a donor as a CSR contributor under Companies Act, then if I'm falling into certain class, then I need social impact assessment report also. Now, when I say impact, impact means the output which we have obtained and attained by virtue of the social causes which we took off for the purpose of this achievement. Let me move forward. Let us take some examples of successful NPOs in India. There are many, but I have taken some of the prominent NPOs which are successful. First one is HelpAge India. So this NPO started off in 1978 to help elderly people in our society to lead the quality life. In 2020, it became the first and the only Indian organization to be awarded the UN Population Award 2020. Other one is Akshay Patra Foundation. So it was started in year 2000 to prevent classroom hunger by providing midday meals in government schools and other government-aided schools. Then Smile Foundation. It was started in 2002 to provide education of poor children, healthcare for poor families, livelihood for the youth, training people in required skills, and women empowerment. Then Nanhikali was started in year 1996 to help girls from low-income families completing 10 years of formal schooling. Then we have CRY, Child Rights and You. It started off in year 1979 to address children's critical needs of healthcare, nutrition, education, protection from child labor, and child marriage. So if you see at a dynamic way, all these activities are somehow social causes. Whether these activities have made the life of these needy people good or not, in the right earnest, that is social impact. Now, having said that, and discussed on the lines of what the risk NPOs can face, what the steps can be taken care of for the building of financial resilience, we need not undermine the financial reporting by NPOs. So for the purpose of financial reporting by NPOs, we need to discuss some pointers. Obviously, I will give the highlight of these pointers only, outlining of the pointers only. In this second session, which me, Mitulji, and Raviji will be collectively addressing, we can discuss the financial reporting pointers in much more detail. But as ice breaking, the typical matters which we need to address for the purpose of financial reporting by NPOs includes books of accounts. Now, why books of accounts is important? When we say NPOs, NPOs can either be corporate NPOs or non-corporate NPOs. For example, a company incorporated under Section 8 of the Companies Act. Or I should correct myself, a company is incorporated under Companies Act, but licensed under Section 8 of Companies Act to carry out some welfare activities, is mandated to maintain books of accounts as required by Section 128 of Companies Act. So what I'm trying to say, if you are a company under Companies Act, the books of accounts to be maintained are specified. But let us take a different scenario. You're a society or you're a trust. There may be a possibility that the parent law which is applicable to you, maybe Societies Act, maybe Trust Act, may not be defining books of accounts. For that very purpose, we need to have a discussion on what books of accounts need to be maintained. So I will refer this point for further discussion when we all three speakers will be collectively addressing. Then is applicability of accounting standards. Please underscore my words. When I say accounting standards, again, the same thing will prevail. If you are a company, then accounting standards will be applicable, and these accounting standards can be of two sets. One is accounting standards, second is Indian accounting standards, which is popularly called as Ind AS. For instance, let us assume Helpage India is a Section 8 company. Now, if Helpage India is a Section 8 company, it may be complying Companies Accounting Standard Rules 2021. Now, let us take another scenario. Only academic discussion. Let us assume the company is Wipro Limited, and Wipro Limited is the holding company of another Section 8 company, namely Ajim Premji Foundation. So Ajim Premji Foundation is a Section 8 company under the Companies Act. But Ajim Premji Foundation is a subsidiary of a listed entity, namely Wipro Limited. Being a subsidiary of a listed entity, this Ajim Premji Foundation needs to comply with Ind AS. And obviously, we must understand there are different set of requirements for AS compliant companies and Ind AS compliant companies. Further, I must say the strengthening of my words will be made by CA Mitulji and Raviji in some moments. Then is the other issue, method of accounting. Shall the NPO follow cash basis of accounting or accrual basis of accounting? One thing is certain, if the NPO is an entity which is registered and incorporated under Companies Act, no option but to follow accrual basis. But there could be situations like that. The NPO is not a company, rather a non-company entity. Then the option still is there, cash basis or accrual basis. How to decide, how to take a decision whether my non-corporate NGO or NPO should follow cash basis or accrual basis, we will discuss after some moment. Then is accounting of revenue. Being an NPO, you can have the revenue from sale of goods also, rendering of services also. Now, how to account for revenue when you are selling goods and how to account for revenue when you are selling services or rendering services, the things are a bit different. We'll discuss afterwards in some moments. Then is grants and subsidies. You may receive grants from government, you may receive subsidies from government, you may also receive some grant and subsidies from your parent entity. How to do the accounting for the same is important. Then is depreciation. Now the question arises whether depreciation needs to be provided in case of the assets which are purchased and are expected to be replaced by donors when useful life of the assets is over. That's a very big question before the NPOs. If I purchase an asset, let us assume I purchased a roti maker, I purchased a chapati maker, and the useful life of this chapati maker or roti maker was 10 years. After 10 years, my donor stated, do not purchase again, we will replace. So I spent nothing. Now the question arises, if as on date I knew that after the expiry of useful life of this chapati maker or roti maker, I need not spend again for the purpose of replacing this chapati maker machine, because donors have already stated that we will replace it. Whether we need to provide depreciation, that's a big question which NPOs face. Then is CSR assets. If you refer CSR rules 2021, one of the provision is if a company is contributing CSR assets, for example, XYZ Limited is a company on whom CSR is applicable. Now, what the company did? XYZ Limited constructed a shelter home for the poor. And the money was spent by XYZ Limited from its own pocket. Now, it is very much a CSR expenditure, eligible CSR expenditure. But the question arises, the asset which is being created by XYZ Limited, the CSR rule says these assets, popularly called as CSR assets, cannot be held and possessed by XYZ Limited. Rather, these CSR assets must be held and possessed in the name of beneficiary. The beneficiary here could be NPO. Now the question arises, if NPO will be holding and possessing the CSR assets, how this should be reflected in the balance sheet as a part of your financial reporting? So this is again a challenging question which Mitulji and Raviji will be discussing after some time. Then another one is certain assets whose benefits ultimately flow to the needy. Now, if you go to the accounting angle, in accounting, the asset is defined. And how it is defined? They state that then you see the framework of accounting, the conceptual framework of accounting, what it stated. Asset is a resource controlled by the enterprise. So enterprise in my example could be NPO. Asset is a resource controlled by enterprise, that is the NPO. The economic benefits of which are expected to flow to the enterprise, that is again NPO. Now, if you look out the definition of asset, it appears that to bring asset into my balance sheet, two conditions primarily must be fulfilled. First one is asset must be under my control, and second is the economic benefits out of this asset should flow to the entity. But now the question arises, if I have an asset, but the benefits out of it are flowing to the needy, then whether I should show this asset in my balance sheet or not. So all these are financial reporting matters. And I believe my fellow speakers will be helping in discussing all these matters after some moments. Then we need to again address the second accounting issue is fund-based accounting. This fund-based accounting is quite typical to NPOs. Now, when we say fund-based accounting, we need to understand what can be the different types of funds. So we can have unrestricted funds, we can have restricted funds, and we can have endowment funds. Now, unrestricted funds can have further subsegments of corpus, designated funds, and general funds. What is corpus? So corpus is something like a capital only. So it is the amount which is contributed by founders or promoters initially when the NPO is established and formed. Then we have designated funds. So these are the funds which are set aside by the trustees or management of NPO for specific purposes to meet future commitments. Now you may be thinking how this designated fund could be unrestricted because it is meant for specific purpose. It is considered as unrestricted because here the management and trustees always have a right to change the designation from time to time. So it is not purely restricted. It is having a flexible restriction. That's why it is designated. Then is general funds. So any other fund which is not falling within above two categories will be called as general fund. Then is restricted fund. So whatever money you received as a donation or as a revenue, and you appropriated that money only for specific purposes, subject to certain conditions and obligations by the as set out by the contributors, then it will become restricted fund. For example, if Nitinji contributed to HelpAge India, and Nitinji stated, I am contributing rupees 10 lakhs to you, but this rupees 10 lakhs should be used only for purchasing bed sheets, clothes, and other apparel for the old age people, then it will become restricted fund of rupees 10 lakh because it is subjected to certain terms and conditions and obligations as set out by the contributor, namely Nitinji. Then is endowment fund. So endowment funds cannot be used for any purpose. They will remain static, but only the income earned from these funds can be used either for general purposes of NPO or for specific purposes. So endowment funds will remain static. Maybe you can, as an NPO, you may have fixed deposits lying with a bank. So fixed deposit will not be used, but whatever interest income NPO is earning from these fixed deposits, it can be used for any purpose of the NPO. When I say any purpose, it could be general purpose also, specific purpose also. So these are some of the financial matters which we need to ponder over, and we will obviously discuss these matters after some moments in the second leg of this session. Now, let me move to the other segment of my discussion, listing on social stock exchange. Shwetaji, can you please confirm my new slide is visible? Listing on social stock exchange?
Yes, sir.
Okay.
Fund-based accounting is visible, sir.
Fund-based accounting is visible. New clip is not visible. Listing on social stock exchange. Okay,
No,
let me reshare. Just a moment. Shwetaji, is it visible now?
Yes, sir. Yes, sir. It's visible.
So listing on social stock exchange, I would say it's a paradigm shift for the NPOs existing in India. Now, what is this all about? It needs a lot of time to discuss, but I will discuss listing on social stock exchange today as a primer. So to begin with, let us go to the bit of the history, how this whole concept started. So the concept of social stock exchange came into existence in the year 2003. And the very first social stock exchange was introduced and launched in Brazil. Thereafter, many countries like South Africa, Portugal, Canada, Singapore, United Kingdom, Jamaica, they also they also joined the bandwagon, and they also launched their SSE, that is Social Stock Exchange. So if you say totality, we are having rather 7 social stock exchanges, out of which 3 only are surviving, and they are based in Canada, Singapore, and Jamaica. So this way the whole journey started of late. Now, what happened towards Indian continent? If you remember the Union Budget speech of year 1920, our Honorable Finance Minister stated that, if you see the highlighted area, the Honorable Finance Minister stated that I propose to initiate steps towards creating an electronic fundraising platform. Please focus these words: electronic fundraising platform, a social stock exchange, under the regulatory ambit of Securities and Exchange Board of India, for listing social enterprises and voluntary organizations working for realization of social welfare objective, so that they can raise capital as equity, debt, or as units like mutual fund. You can see this press release by searching on Google. The date is before you, 5th July 2019 is the date of this press release. What you need to understand here, see the words electronic fundraising platform. So we have NSE, National Stock Exchange. We have BSE, Bombay Stock Exchange. So NSE and BSE already were having some platforms, like NSE and BSE, they were having main board, which is meant for listing of commercial enterprises. Then NSE and BSE do have SME exchange, that is small and medium enterprise exchange, for MSME enterprises to get themselves listed, which is popularly called as SME listing. Now they also do have, in addition to what the 2 other scenarios they are having, SSE, Social Stock Exchange. So BSE and NSE both are having their other platforms called as social stock exchanges. You would be glad to know close to 60 NPOs are listed on SSE of NSE. So close to 60 NPO entities are listed on National Stock Exchange platform, Social Stock Exchange. So I would say SSE of NSE. And close to 40 NPO entities as on date are listed on SSE of Bombay Stock Exchange. It is a good sign. And this concept is not entirely new, because it started in year 2022 when SEBI amended ICDR. ICDR stands for Issue of Capital and Disclosure Requirements Regulations. In SEBI ICDR regulations, Chapter 10A was introduced. In this Chapter 10A, Regulation number 292A to Regulation number 292P, these 16 regulations were inculcated, which are dealing with the whole gamut of listing on social stock exchange. This is the introduction primarily for what listing on social stock exchange is all about. To add further, what is social stock exchange? So social stock exchange is a separate segment of existing stock exchange. Like I gave the example, BSE is having its own platform for SSE. NSE is also having its own platform for SSE. And this SSE can help social enterprises to raise funds from public through the stock exchange mechanism. SSE will act as a medium between social enterprises and the fund providers, that means donors or contributors, that can help them to select those entities that are creating measurable social impact and reporting such impact. I correctly remember the words of our worthy chairperson, Sri Priya ma'am, that social auditing has become the law now. The same words were echoed by our vice chairperson also, Dr. Anuj Goyalji. Social auditing has become the law now. And the social auditing is being carried out by certain professionals who have qualified the examination of NISM, and these people are called as social impact assessors. Now further, we need to understand certain type of social enterprises, that is NPOs, that meet the registration criteria can only register on SSE and then undertake to make continuous disclosures on their social impact. Such NPOs may or may not choose to raise funds through SSE, however, would continue to make disclosures including on social impact to stock exchange. What is the scenario? We need to understand If you are NPO, then you have an option that simply register yourself on SSE, but do not raise the funds. So it's your option to raise or to not raise the funds from SSE. But the very moment as an NPO, you are getting yourself registered on social stock exchange. If you are not raising any funds, or irrespective of whether you're raising any funds or not, you need to make certain compliances, including certain disclosures on social impact to be made to stock exchanges. Let me show you a macro bird's eye view of what this whole system goes on. So this is the clip which I have taken from the website of NSE. Now, what the NSE or listing process, both by BSE and NSE, inculcate. For the purpose of listing on social stock exchange, the enterprises are classified into two categories. One is NPO, not for profit organization, and second is FPE, for profit enterprises. We'll discuss in detail in a while. Now, what the law says in Chapter 10A of SEBI ICDR regulations, NPOs can register on SSC and get these securities listed also. What kind of securities they can list? It could be zero coupon, zero principal bond, mutual funds, developmental impact bonds. Now we can have FPE, that is for profit enterprises. They need not register on social stock exchange, but securities can be listed, and these could be equity, main board, SME, innovators growth platform, equity, alternative investment fund, social impact fund, issuance of debt security. We'll discuss in detail in a while. Now let us understand in detail. So what is a social enterprise in context of social stock exchange? The law recognizes two forms of social enterprises. When I say the law means SEBI ICDR regulations. ICDR, I repeat, stands for Issue of Capital and Disclosure Requirements Regulation. So the law recognizes two forms of social enterprises, that is not for profit organization and for profit social enterprise. These are engaging in the activities of creating positive social impact and that meet primacy of their social intent. See, the words are primacy of their social intent. Now, question arises how to establish primacy of social intent. For this purpose, we need to dive into SEBI ICDR. And what the SEBI ICDR regulation number 292E states, it says that in order to establish primacy of social intent, any entity, be NP or FPE, should meet all three conditions or criteria mentioned under regulation 292E2 of ICDR regulation. Now, what are these regulations saying? Briefly, these criteria require that the entity must indulge in activities prescribed under regulation number 292E. We will see the activities in this clip. The entities must target underserved or less privileged population. I will call this as now target population. So target underserved, I correct myself, target underserved or less privileged population, segments or regions which have recorded lower performance in the developmental activities of central or state governments and have at least 67% of its activities qualifying as eligible activities to the target population. Now, what is target population? The words target population can be defined as given in clause number B, that is the target underserved or less privileged population and so on. Now, what is 67% criteria? SEBI ICDR says 67% qualifying criteria means predominant criteria. If you will fulfill any of these criteria, if you will fulfill any of these three criteria, and you're involved in certain specific activities, which you can see on the screen, then you're eligible to get yourself listed on social stock exchange. Now, let us see one by one. What is this 67% qualifying criteria? So first of all, we need to understand any one of these criteria needs to be fulfilled to become eligible to go into SSE, subject to NPO's involvement in eligible activities also. What are eligible activities? We'll see later. Condition number one, or I should say criteria number one, at least 67% of its revenue, at least 67% of its revenue of the immediately preceding 3-year average of revenues comes from providing eligible activities to members of target population. Now, what is target population? You know already. This clause number B is target population. What are eligible activities? Please wait for a while, I will show you. Second criteria, at least 67% of the immediately preceding 3-year average of expenditure. So first is revenue, second is expenditure, has been incurred for providing eligible activities to members of target population. And last criteria, members of target population to whom eligible activities have been provided constitute at least 67% of the immediately preceding 3-year average of total customer base and oblique or total number of beneficiaries. The first one is revenue criteria, second one is expenditure criteria, and third one is population criteria, that is the served population criteria, which is 67% and more than that. Before I jump onto the next clip to show you the eligible activities, let me ask you one question. First is revenue criteria, second is expenditure criteria, and third one is population targeted criteria. Don't you think without strong financial reporting system, this will not be possible? And for this very reason, we need to understand that NPOs need to come up in a structured approach of financial reporting, irrespective of whether they are into corporate structure or non-corporate structure. Now, what are these eligible activities? That is, they have given a list of these eligible activities like eradicating hunger, promoting healthcare, promoting education, gender equality, environmental sustainability, protection of national heritage, promoting sports, supporting incubators, supporting other platforms, promoting livelihoods for rural and unpoor, slum area development, disaster management, financial inclusion, facilitating access to land and property assets for disadvantaged communities, bridging the digital divide in internet and mobile phone access, addressing data protection, and lastly, promoting welfare of migrants and displaced persons. I need to take 2 minutes of yours specifically on this second last activity, bridging the digital divide in internet and mobile phone access, addressing data protection. Please listen my words carefully. If you see all these activities, most of these activities are aligned. Most of these activities are aligned and are similar. Most of these activities are aligned and are similar to the CSR activities as are given in Schedule 7 of Companies Act 2013. I must remind you here, Schedule 7 of Companies Act 2013 deals with specified CSR activities. So most of the eligible activities which you are able to visualize on the screen are quite similar to whatever activities are specified by Schedule 7 of Companies Act 2013. But in Schedule 7 of Companies 13, this second last activity, bridging the digital divide in internet, mobile phone access, addressing data protection, this activity is not there. What the point I'm trying to make out? I'm trying to make out a point. If I'm a company and you are the NPO, if I am donating you out of my CSR expenditure so that you can promote data protection or you can bridge in digital divide, in such a case, my contribution to you will not be qualifying CSR expenditure. So, but we need to understand that if activities are given on the screen or in the law, we need to be very particular and very precautious that some of the activities may be eligible activities for the purpose of social listing, but that activity may not be eligible CSR activity under Companies Act. So as a donee and as a donor, both needs to take a call depending upon the way they are going to contribute. I'm switching the screen for a while. Now what happened? In January 2023, ICAI issued social auditing standards. Let me share a screen and you will be very, happy to see the screen, what is coming up. All these activities are being mapped in 16 social audit standards. So total standards are 16, which is called as SAS, social auditing standard. Let me share the screen. Shweta ji, please confirm karna once my screen is visible. Just give me a moment. Are you able to see a PDF document?
Yes, sir, it is visible.
Okay, ji. So just see what I have done. I have mapped these social auditing standards list with the activities given by ICDR. So if you see this chart or a table, First column is serial number. So total 16 standards are there. And how they're codified? They're codified as social audit standard 100, 200, 300, and so on. And if you see all these activities, just see one by one, I'm highlighting all these activities. All these activities are the same activities which we just have seen on the PowerPoint clip. So that bridging the digital divide in internet. For this activity, if you are engaged as an auditor, you have to follow the social audit standard number 1500. Now, how the structure of SAS is being devised? All the SAS are having certain sections. Like we have section 1 dealing with introduction. Section number 2, which deals with process of social audit. Then this process is being given. I will not discuss the process considering the paucity of time. Then we have illustrative key performance indicators also given. So some of the audience asked social impact. So to assess and evaluate social impact, these social auditing standards could be helpful. Then we have section number 3, dealing with assessment of challenges and limitations. And section number 4, appendix. Appendix to taxonomy classification of areas. And what I have done, all these SAS, or I should say all these activities, that is these 16 activities, are contained in regulation number 292E, AI, A2, A3, A4, and so on. So all these are mapped. So what is the point I'm trying to make out over here? I'm trying to make out a point that social auditing standards are having a nexus with regulation number 292E of SEBI ICDR. The things are not hovering here. The things get complicated here because when we say audit standards, I remember and I believe my co-fellows Mitulji and Raviji may endorse my words, auditing begins where reporting ends. And for that very purpose, this financial resilience is very important because you have to do the financial reporting first in a resilient way so that if Mitulji is the auditor, you should not say your social impact is bad, it's adverse. Yeah. And for that very reason, the topic which is being adopted by the board today is relevant one. Let me come back to my screen share once again. Few more clips are pending. Let us cover those clips. I think the screen is again visible. Mitulji, can you please confirm?
Yes, sir. Yes,
it is aware. It is visible. Yes.
Now, up till now, what we saw are the rosy things. Now let us deep dive into some bad things also. And I should not say the bad things, rather some of the limitations. So there's a special note. The special note, the limitation is NPOs are allowed to be listed, but let us understand who are not allowed to be listed. So that's this very purpose. The note says corporate foundations, political or religious organizations or activities, professional or trade associations, infrastructure and housing companies shall not be eligible to be identified as social enterprises. So housing companies are not allowed to be listed on SSC, but there is an exception. The companies which are engaged in providing affordable housing. So your client may be NBFC, non-banking financial corporation. And this non-banking financial corporation, say, is engaged in providing loans for affordable housing. In such a case, the question arises whether this NBFC can get itself listed or not. And this thing needs to be pondered over. Further, the question arises which social enterprises are not eligible at all to be registered or raise funds through SSE. Very common and understandable self-explanatory points. The law says if a social enterprise, any of its promoters, promoter group, or directors, or selling shareholders or trustees are debarred from accessing the securities market by the board here means SEBI. Number second, if any of the promoters or directors or trustees of the social enterprise is a promoter or director of any other company or social enterprise which has been debarred from accessing the securities market by the board. Let me give an example, obviously academic example. Let us take a situation. Mr. X is a director in Diwan Housing Finance. That's purely hypothetical and academical discussion, nothing connected to the real world. So if I assume that Mr. X is a director in Diwan Housing Finance Limited, which is the listed company, but due to some unfortunate reasons, SEBI debarred Diwan Housing Finance Limited and this Mr. X to access the securities market. Now the question arises, if Mr. X is a trustee of Helpage India, can Helpage India get itself listed on social stock exchange? Answer is no. Answer is no. Why? Because in Helpage India, one of the trustee is a director of such a company which was debarred by SEBI from accessing the capital market. Number third, if the social enterprise or any of its promoter or directors or trustees are willful defaulter or a fraudulent borrower. So there could be a situation like that. Any financial institution has declared Mr. X as a willful defaulter as per RBI norms. And this Mr. X is, say, a trustee or a promoter in your enterprise, that is NPO. Then obviously what will happen? This social enterprise will not be allowed to be listed. On the same front line, if any of its promoters or directors or trustees is a fugitive economic offender. And lastly, if the social enterprise or any of its promoters or directors or trustees have been debarred from carrying out its activities or raising funds by the Ministry of Home Affairs or any other ministry of the central government or state government or charitable commissioner or any statutory body. So ultimately what is happening, if you are facing any debarment, either from securities market, or you are a willful defaulter or a fugitive offender, or you are debarred otherwise from the government of India, then obviously the enterprise in which you are involved as a promoter or a trustee cannot be listed. Now, question arises, we always say NPO. So in the context of social stock exchange, which enterprises are called as NPOs? Very simple one. Number one is a charitable trust registered under the public trust statute of the relevant state. Number second is charitable society registered under Society Registration Act 1860. Then a company incorporated under Section 8 of Companies Act. And lastly, any other entity as may be specified by SEBI from time to time. Having said that, what we need to understand, if you recollect, I showed you a chart in the beginning. I told you that enterprise for the purpose of SSE can be into two segments. One is NPO and second is FPE, for-profit enterprises. The question arises, what is for-profit social enterprise in context of social stock exchange? The law says it could be a company under the Companies Act operating for profit and loss and does not include a company incorporated under Section 8. Why it is written so? Because Section 8 company is already included in NPO list above. And the second is a body corporate operating for profit. It could be any body corporate. Now, the question arises, what are the various ways in which NPO can raise funds through social stock exchange? So the law says, whenever I say law here means SEBI ICDR. The law says a non-profit organization after registering with social stock exchange may raise funds on social stock exchange through issuance of zero coupon, zero principal instruments. And just see what I'm writing in brackets, through private placement or public issuance. So please understand, when you are NPO and you are registered under Companies Act as Section 8 company, then being a Section 8 company, you need to comply not only SEBI ICDR, but also Section 42 and 62 Companies Act, because you're a company also. Now, on the other side, if you're a non-company entity like society under Society Registration Act, then you have to comply as SEBI ICDR, because in Society Registration Act, there are no explicit rules or provisions about such kind of private placement. Then is second limb, donations through mutual fund schemes. But all schemes are not covered, only those schemes will be covered which are specified by SEBI. And then any other means that SEBI may specify in future. So because it's a kind of a nascent concept, many more kind of instruments will be specified by SEBI in times to come. Now the other question is, first is NPO, how to raise funds, then is FPE, how to raise funds. So the law says a for-profit social enterprise may raise funds through issue of equity shares on main board. I told in the beginning, we have main board, we have SME platform, we have innovators growth platform, as the case may be. Then is issue of equity shares to an alternative investment fund, including social impact fund. So this is something new, social impact fund. That is issue of debt instruments. And lastly, any other means that SEBI may specify in future. Now, few questions. Question number one, is it mandatory for a non-profit organization to register in order to raise funds through SSC? Answer is yes. So it is mandatory for a non-profit organization to register with Social Stock Exchange before it raises funds through SSC. But I told you in the initial series also, let us repeat that thing. However, NPO may continue to raise funds through any other means as permissible under the law, whether it is registered or not with the Social Stock Exchange. What the point I'm trying to make out? People generally ask, if I'm listed on Social Stock Exchange, whether I would be able to obtain private donations or not, whether I would be able to obtain government grants or not, or I can only raise funds through medium of SSC. Answer is, you have both the options still open. You can raise funds through SSC medium also, you can raise funds through private medium also. So with these words, I stop myself over here and I hand over to Shweta madam to proceed further and guide us further how we three fellows should coordinate.
Thank you, sir. Thank you, sir. Now, we would like to welcome Nitin, sir, Secretary, CIRC, to just introduce the another speaker, sir. Nitin, sir.
Thank you, Shweta ma'am. We have with us Ravi Kant-ji. Ravi, are you listening, ma'am? Hello?
Nitin ji, are visible.
Yes, sir.
Ravi Kant-ji is a fellow member of our institute and employed with a Guru and Jana chartered accountant firms at Bangalore. He holds 7 years of experience with the big four firms, specializing in accounting standards and Indian accounting standards. He has accomplished a corporate trainer conducting various informative sessions on AS and Ind AS. Raviji has authored a Ind AS Ready Reckoner, which is published by Taxman Delhi, providing valuable resource for a professional and a accounting community. He has authored 6 comprehensive books for CA students, and he has also served as a technical review for the Financial Reporting Board of ICAI. With these words, I present before you, Ravi Kant.
Hello, sir. Thank you, sir. Thanks for the introduction of our next speaker. Now I request Mr. Rajiv ji to introduce our another speaker. Rajiv, sir, over to you. Mama.
Thank you, ma'am. Thank you, Shweta Paul, ma'am. Our next speaker, Mr. Mitul Shah, is a practicing chartered accountant from the Chennai, Tamil Nadu, with experience of over 11 years in the field of auditing, accountancy, advisory, and consulting, working in a big four firm as a consultant on IFRS in the year since January 2020 till date. Catering to the client in India, UAE, and Singapore, he is currently working on a 3 large IPO advising engagement for a large NBFC in India, assisting them to raising approx INR 40,000 millions of equity capital, and also has assisted companies, banks, NBFC on expected credit loss with a total assets base over the INR 7,50,000 millions in India. He has trained more than 5,000 professionals and hold an extensive experience in handling the multinational, multi-locations, client and Indian companies, along with the specializations in gap convention, IPO advisory, technical accounting advisory, and many more. He also being a visiting faculty of IFRS in the years for ICI, including ICI in Dubai chapter, been involved in a fund accounting services to the client in a hedging fund industry. Over to Sweta ma'am.
Thank you, sir.
Welcome our speaker, this whole person.
Thank you, sir.
Thank you, sir. Thank you, sir. Now over to Mitul, sir. Mitul ji, questions, I think, in front of you in the chat box. Now you can moderate the session, sir.
Sure, Shweta ji. Thank you so much. So basically, we have a question here. With the current economic uncertainty, what specific strategies can non-profit adopt to ensure long-term financial resilience? Okay. Now, elaborating this question and also the requirement, if you see, okay, Now, this platform, which has been emphasized through a lot of deliberation since the last hour, focuses on raising capital, at the same time transparencies for NPOs. Okay, so the ease of raising capital. Okay, now let me just cite an example. While most of the discussion, if you see, in terms of the social stock exchange has been rightly articulated by Mr. Kamalji, and also since the very beginning, our chairperson as well as the vice chairperson has rightly emphasized the need for us to transition towards the social stock exchange, okay, with the upcoming norms that we have from SEBI and the related regulatory guidances. See, the very first client, okay, or let's say the NPO that got listed, which is SGBS, Unnati Foundation, that is a Bangalore-based NPO, okay. Now they are into healthcare and multiple other social service or activities. Now, at the very first instance, they were able to generate a contribution extending to 1.8 crores. You must have read this in the news around December 2023. Now, the advantage that this SGBS Unnati Foundation has drawn, okay, by rightly taking itself to social stock exchange, number one, getting a public visibility as to what activities they are undertaking, getting exposed to large or the marketplace, including large pool of investors. So if you see, by raising 1.8 crores, there were investors ranging from NABARD, which is again a government institute body, Zerodha broking houses, okay, they invested in this at the very first instance. Now, this becomes a catalyst by just being on the social stock exchange, okay, becomes a catalyst for them to raise easily the funding requirement for carrying out their operations, okay. At the same time, there are now a sustainability reporting board that we have, which emphasizes more on the reporting or the disclosures norm, okay. So going forward in the upcoming times, the need or emphasis of having a right accounting at the same time having a right transparency, okay, by promoting healthy disclosures to your investors, you can you can try to promote your entity. At the same time, this would assist you to raise your funds easily in the marketplace, and at the same time promote the global operations across India, okay. So this is how I would like to address this. Now, the next question that we have, what specific knowledge and skills are required for financial professional, particularly chartered accountant in India, to support non-profit organization in navigating the complexities of listing on social stock exchange? This is a very interesting question, okay. While we are qualified chartered accountant in the marketplace, but sometimes we feel that what is the right set of knowledge that we should have to take corporates to an index, okay, or getting them listed in an index. Now, friends, I'm working as a chartered accountant, okay. I'm just trying to answer it this way uh, uh, by just navigating as to how from a normal auditing or an auditor, we are now kind of a consultant for NBFCs in the marketplace for taking them to IPOs and also acting as independent chartered accountant. Now, friends, interestingly, the hub of knowledge repository, I would say, is the domain of ICAI. From time to time, okay, we should ensure that we are updated with the right set of knowledge that comes into the portal of ICAI. Now, for example, if you see during financial year 1920, as Kamalji has in his presentation, he was showing the screenshot wherein the government of India emphasized the need for coming up with a social stock exchange. Now, in terms of skill set, very important is that we should be updated timely with the regulatory changes that are happening, and there are many. It is not just the discussion around the social stock exchange. At the same time, I just throw a question to the larger audience here as to how many of you are aware with the S1 and S2 of IFRS, which talks about the sustainability reporting standards. Now, this question we should ask ourselves as to how timely are we updating our knowledge horizon or ambit. Now, sometimes this type of questions on yourself help us you to get to the right platform. And trust me, ICI has a good repository, not only from the perspective of taking a client to IPO or an social stock exchange, but apart from that, on your taxation, on your transfer pricing, on your auditing, accounting as well. So you must use them from time to time in developing your required skill set. Okay. Now, interestingly, just last week, we just got 3 queries from those NGOs which are into animal welfare, and they intended their interest to get listed on the social stock exchange. So now, my friends, as a chartered accountant, it's a dual role that we play in the marketplace. One, as an advisor, and also, are we on the right track in terms of the knowledge that we are advising to our clients? So that becomes very, very essential. So friends, the social stock exchange and the related complexities, okay, it's must. And we should rightly equip or acquaint ourselves with all the right knowledge from the institute, and also the marketplace where there are companies who are listing, who are coming up with a impact report, as Kamalji has rightly uh, highlighted. There are 1,000 corporates which are big corporates that have been mandated to come up with an integrated reporting by SEBI. Okay, the 1,000 corporates. Just have a check, have a read of what disclosures these guys or these companies are doing, which will serve as a good reference point for you, which can also assist for you to take your client for a social stock exchange. Next, I go to the third question, which is question from one of the participants. One NGO is a branch of a foreign company having 12A and ATG registration and have FCRA registration and having CSR funds. Can this NGO go for SSC registration? If yes, as what? If not a trust, a society, or Section 8 company? Now, my friend, it's a branch, right? It's a branch, so it would definitely have number one, it can definitely, yes, go for an social stock exchange listing. Yes, there is no restriction as far as the activities, as has been highlighted rightly by Kamalji on the presentation, as if it has been getting covered with the activities or with the standard activities that has been defined. There is no stoppage from them to go to SSE, where there are other criterias in terms of, again, I go back to the presentation that has been presented by Kamalji, stating that it should be in operation for 3 years. There has been revenue stream, there has been expenditure, 60% of the activity should be to those population which are getting addressed with the activities that the NGO has come up with. So those guidelines are there wherein the entity should meet. But having said that, yes, it has been allowed. But now, if I just say that if this branch is a company or a section entity registered license holder company, then it can definitely go itself as a setup registered as Section 8 company. Yes. I see, are there any specialized training or certification program available to enhance the capacity of financial professional in this regard? Yes, so basically now there are courses available. From time to time, I would request you can visit the HR team of our institute in nearby vicinity. And specifically, we have good certification courses on IND-AS, as well as now Institute has come up with the sustainability reporting related certifications. Okay, so you can take advantages and use them for your good comfort. Oh,
Ravi sir, now we request you to address the questions raised.
Yes, madam. See, one of the question can you elaborate on the specific steps non-profit can take to protect their financial data, donor information from cyber attacks? Um, I think like that's not directly related to like the discussion, maybe, right? That is general. I mean, general cyber. I mean, protection which is required for their information, right? And let me go to the next question. What are the some best practices for non-profits to ensure transparency and accountability to stakeholders after listing on the social stock exchange? See, the point is very simple. See, one thing, I mean, overall, whatever actually Kamal sir has covered almost everything, right? But I will be just in a minute or something, I'll just try to summarize it. See, one thing is when it is when you're reporting, financial reporting is ethical, and the financial reporting is transparent, and the financial that is accountability, if it is there with NPO, right? And that is what that is by the same time, as Kamalji has given it very clearly in one of the slides, your bookkeeping as well as the compliance of accounting standards. So I think it's, yeah, compliance of, is it audible?
Yes, sir.
Yeah, so compliance of accounting standards and with respect to so many accounting. And there is a technical guide which is issued by ICAI, right? If you comply with all these technical instances like bookkeeping is perfect and ethical and everything, transparent, and your social reporting in the with respect to social reporting, your key performance factors and the indicators, what exactly is achieved by the NPO, if it is presented perfectly, that itself is more than sufficient. Right. Generally, what happens, I mean, even though there is some technical guide and accounting standards and India, so many things are there. Generally, what happens, people take it, I mean, give less value to it and they don't present the information in a right fashion. So the social stock exchange, as it is very well discussed, see, there are so many people who are ready to donate, and there are so many people who are needy actually. But the point is there is no connection. That connection is going to be fulfilled by this social stock exchange. And see, when I want to donate 1,000 rupees, and if I get to know that that is not going to be used in a proper fashion, obviously it will hurt me. Then and the basic question will come: why should I donate it? Right. Now the point is, if I get to know about the NPO which is really doing well and there is no fraud, and if they are, I mean, spent it for the good cause and whatever they said, that is perfect, right? Automatically, I would love to donate to such kind of entity. So here, yes, there are so many NPOs who are actually performing good, performing in the sense, yes, they are achieving their mission or their goals, but that has to be presented in a right fashion, and that has to be audited. I mean, that as part of social audit, right? And if it is given to the right person, then I think the purpose will be served. So that's, yes, transparency, accountability to the shareholders, which is obviously very much important. Yeah, that is with respect to presentation and correct now avoiding. I mean, at the same time, the governance of this body, the trust or the company, the board of directors, yeah, are supposed to be, I mean, ethical. At the same time, they should be able to present it. Yeah, one of the slides, like Kamal sir has told, if somebody is a defaulter, right? So then obviously if you keep such kind of person that but that they don't obviously cannot be a part of it, then if such kind of persons are directors of the NPO, that will never serve the purpose. That will be a black mark on their I mean journey basically, right? The next question: what do you envision for the future of non-profit financing and role of social stock exchange in driving sustainable social impact? See, I feel that this is one area where, I mean, a chartered accountant can look at, right? This is a new area where you can, I mean, there are so many opportunities for the chartered accountants. Yes, with respect to compliance, with respect to accounting, with respect to, I mean, consultancy, with respect to legal aspects, you can see a lot of opportunity within this area of social stock exchange and with respect to NPOs as well. Yeah, and the next question: how does sustainability reporting contribute to building financial resilience in the NPOs? Right. See, there are two questions. First one is, how does sustainability reporting contribute to building financial resilience in NPOs? See, that's what I already explained in one of the last point. If you are able to present it, if you are able to present, yes, see, this is the basic fund what I have received, and this is for the cause I have spent it, and this has been certified, and this has been audited by some other party. That itself will be what is that confidence that will strengthen the relationship between the donor and the NPO. Then automatically you will be able to get good amount of funds, and from the larger society also will be interested to, correct, as I told you, like even if it is 1,000 rupees when I want to donate it, and that should be for the cause, and that whatever the cause specified by the NPO, that should be properly utilized by them, right? Then automatically that will lead to your that will lead to financial resilience. Yes, if there is an NPO, like has Kamal sir has listed already so many good and successful NPOs. Yes, they are performing very good, and you are not listening anything like negative about them. Automatically, like, would you like to invest in, would you like to donate some money to them? Yes, obviously any human would like to donate. So your sustainability reporting will lead to a long term, and that will build the financial resilience in case of NPOs. Right. And what are the key components of the effective sustainable reporting for such organization? Yeah, see, there is, I mean, that is right now not mandatory, the sustainability reporting for this. I mean, there are only for 1,000 top entities. Right now, it is mandatory. For the rest of them, it's maybe voluntary, right? That basic information is basic in the sense that what is the information, that is the key information which is supposed to be provided to the donors, basically. Next, what are the innovative fundraising techniques or approaches have you seen successful for NPOs, especially considering the unique challenges they face in attracting the donors and supporters? Yeah, see, the innovating fundraising in the sense, see, there are so many number of ways, right? Let me just try. Yeah, just let me try to share some small slide in this regard. Yeah. See, this is not something great, but yes, it is known. But somewhere you are supposed to apply your innovative brain, basically. See, I mean, revenue diversification. So the basic revenue diversification, one thing is, I mean, for financial resilience point of view, single funding, correct, depending upon only one person or one company, it's going to lead to some risk. Right. So now what are the other things that you can expect? What are you supposed to do? You have to diversify. So diversify to increase the financial resilience. What can be what are the, I mean, examples of such things? Yes, you can go for the grant funding. That means you can approach the government, you can approach the other companies, correct? As you know, like CSR funding is CSR funding, because there are so many companies. Sometimes we have seen some companies, correct? We have seen some companies, they have good amount of money, and the committee, CSR committee of the company will be looking at like where to invest, correct, and correct, where to invest. Is it just for the namesake? End of the day, we'll also feel like that should be utilized in the proper fashion. So yes, approaching the companies, getting the information, approaching the companies who have got the funds, at the same time presenting about your performance and what you have done, and is be loyal, at the same time be transparent to them. That is one of the general way. Right. At the same time, individual donation. This individual donation can be, I mean, a campaign that is using your technology. Right now there's so many ways like people are generating. Right, I also have received like so many, I mean, mails, and where, like, say, just a simple example, Akshay Patra Foundation, which was already mentioned. Yes, they have mentioned this is the reason, this is for this reason. We got a mail, yes, through Instagram, through any many other ways people do. You can approach the people, and yes, try to get the donation. Right. At the same time, transport sponsorship, which I spoke already. Yes, earned income venture, government contracts. These are all some of the ways where you will be able to get good amount of funds. Yeah. See, in between, sir, Kamal sir, can you show the slide which was with respect to accounting? Meanwhile, till we get a question from the users, we'll be able to just try to address at some points. Yeah, thanks a lot, sir. See, with respect to books of account, yes, this is what with respect to transparency, if you want to maintain, right, books of accounts are supposed to be maintained, which is obviously a mandatory point. Okay, that is, books of account has to be maintained, like as already sir told, right? If it is a Section 8 company, yes, as per Section 128 of the Companies Act, yes, you must need to maintain books of account, right? And that has to be, again, next question is method of accounting. Yeah, is it supposed to be as per the cash basis or accrual basis when the question comes? Yes, it is supposed to be as accrual basis, as our technical guide has clearly told, clearly guided in the technical guide. Okay, and with respect to applicability of accounting standards, if you see preface of the accounting standards are either Ind AS. Okay, Ind AS is separate, as you said, like if it is a net worth of 250 or more, it crosses. Or if it is in Section 8 company and which is a subsidiary or which is even associate of a company which was following already Ind AS. Yeah, I try to repeat the same thing. If there is a company which is complying with Ind AS, Ind AS compliant company, and who is supposed to, right, your NPO is an associate even. If it is an associate to such kind of company who is complying with Ind AS, even that NPO is supposed to comply with Ind AS, right? And accounting standards, if it may be a trust, it may be a society, it may be of irrespective of its form, If you are doing, if you are presenting a general purpose financial information, okay, then you are supposed to mandatorily comply with accounting standards. There is one more point. If you are into 100% non-profit, you don't need to comply with accounting standards. Otherwise, even there is a small percentage is going to be other than non-profit objective, then it is all the accounting standards again applicable. Again, with respect to accounting standards, since it is a non-corporate entity, yes, the rules of level 1, level 2, level 3, level 4, and that applicability will, depending upon where that NPO falls under level 1 or 2 or 3 or 4, then yes, standards are going to be applicable, right? With respect to grants or subsidy, yeah, when I say government grants, with respect to accounting standard 12 is going to be applicable. And if it is accounting standard, if it is an Ind AS, then it is Ind AS 20 is going to be applicable, right? So government grants, yes, these two standards basically talk about only government grant accounting. If it is a government grant, right, if it is accounting standard, then there are, revenue accounting, that is income approach or capital approach, right? Most of the circumstances, it is going to be income approach, right? A capital approach will be applicable only when the money is received from the promoters as a promoter. If the government behave like a promoter to start some NGO or NPO, then only that will be presented as a capital reserve. In all other cases, yes, in all other cases, it is going to be a revenue approach. Revenue approach in the sense, yes, it is going to be routed through profit and loss, right? Based on the proportion of expenditure that is expected to be incurred over a period of time. Yeah, I mean to say you're supposed to defer it on the receipt of the money. At the same time, that is going to be deferred and account transferred to profit and loss. Yeah, and so many points are given under accounting standard 20, accounting standard 12 in this regard. When you see Ind AS 20, it is only revenue accounting. There is no concept of capital approach or capital reserve concept. And with respect to Ind AS 20, right, they have given some options. When you receive any non-monetary government grant, yeah, you receive some land or building or furniture, fixture, something from the donor. Yes, as per accounting standard, it has to be recognized at cost. If it is at 100% free of cost, you will be recording at a nominal value. But if it is an Ind AS accounting, if it is as per Ind AS, you have an option. You will be able to account it at fair value, or you will be able to account it at nominal value. Yes, there are some good amount of differences between AS and Ind AS, but end of the day, whatever is applicable, whether you are under the AS or whether you are under the Ind AS, accordingly you are supposed to comply with the respective accounting standards. Yeah, and the next point is depreciation. Whether depreciation need to be provided, which is going to be replaced. That was the question. I mean, which is there in this. See, for depreciation with respect to NPOs, there is no specific rule or specific accounting treatment for NPOs. Yeah, the point, as our Kamal sir has told, what do you mean by asset first? Asset is a resource which is controlled by the entity, arising from the past events, expected future economic benefits inflow to the entity. And there are two basic conditions. What are to recognize to bring it to the balance sheet? You need to satisfy two basic conditions. One is probable future economic benefits inflow. Yes, probabilities, I mean, more likely than not, yes, more than 50% chances that I'm going to get the economic benefit out of it. At the same time, the cost or value that should be measured reliably. Yeah, see, if you have got some asset at free of cost, right? If you are under accounting standard rule, okay, you are following IGAP. What is that you have got? What is that you have paid? I have not paid anything. It's come at free of cost. So if you are falling under accounting standards, that is IGAP, then you will be recording at a nominal value. When it is at 1 rupee or 2 rupees, whatever you paid, then there is no concept of depreciation, right? And if it is going to be Ind AS rule, yes, then there is a choice of accounting policy. Under Ind AS 20, if it is a non-monetary government grant received, the company is able to, I mean, account it either at fair market value or it at a nominal value. If you have taken at a fair market value, right, there will be a depreciation. But at the same time, when you're recording for the first time at fair market value, you will be creating some deferred revenue. Deferred government grant is going to, I mean, asset at fair market value is going to be debited, and the deferred government grant is going to be credited. So deferred government grant is obviously amortized to profit and loss over the period of the life of the asset. At the same time, asset also is going to be depreciated. I mean, net impact to my profit and loss, revenue will be credited to my P&L. At the same time, the depreciation also is going to be debited to the P&L. Net impact is going to become zero. But yes, for presentation, it is very much valuable. So my simple point with respect to depreciation, there are no specific guidelines which are applicable to NPO. Yes, this is very clearly said in the technical guide, one of the paragraphs, technical guides on NPO financial statements. Yeah, certain assets whose benefits ultimately flow to the needy. Yes, see, here this is not economic benefit like I am supposed to earn or something. My objective is to serve the other party. If the asset has the worth, yes, which will be able to serve or which will be able to, reach, the object, the mission, which will be helpful for the mission or the goals of the NPO. Yes, it is going to be an asset in the books of the entity. And next, revenue from the sale of goods or rendering services. Here also there are no specific guidelines like how should we recognize it. Basically, what are the revenues that NPO is going to get in? That one is the donation, that is the major revenue, correct? And they may be getting the interest income and dividend income. It depends upon what kind of securities, what kind of fixed deposits, whatever they have invested, that's going to be the second thing. And some of the NGOs may be into what is that, sale of goods or sale of services as well. Correct. So as I told you, this is accounting standard 9 and the other one is Ind AS 115. Both are applicable, no specific rules and separate, but yes, so you have to read the given circumstance and accordingly you are supposed to account for the same thing. Okay. Right. So revenue of goods, with respect to AS9, yes, there are two conditions. One is The risks and rewards related to the items, goods are transferred to the buyer. Then yes, recognize it. And there is no purpose, I mean, there is no doubt, uncertainty with respect to ultimate collection. These are the two basic conditions, then you can account it for. With respect to render of services, yes, is it, I mean, it depends. Yes, are you going to record under the percentage completion method? Are you going to, is it like 100% completion method? Yeah, depending upon the circumstance, is it, am I performing only one service or is it performing more than one service? Is it first service and second service is linked? And so many criterias are involved in this. Yes, one need to see the standard with respect to special, I mean, with respect to the given circumstance, then only we'll be able to decide the exact accounting. Yes, thank you, thank you, thank you, Kamalji, for this presentation. Yes, madam, over to Shweta.
Thank you, sir. Now we request Kamal sir to answer the queries of the participants.
I have this query number 1. What strategies have you found effective for NPOs to diversify their revenue streams beyond traditional sources, and how can they balance short-term needs with long-term sustainability goals? So in this question, there are two sub-questions. One is how to diversify revenue stream, and second is how to align short-term needs with long-term sustainability goals. I will take up question number 1. So there cannot be a kind of a tight compartment answer for first question, how to diversify revenue streams, because that depends upon the model of operation you are having. But I can share some of the examples from my experience. Like, for example, I have an NPO client which is running a Goshala. Now, I don't know whether Goshala word is quite prominent in other parts of this country or not, but Goshala, in my simple sense, mean thereby the NPO is looking after the cows and buffaloes and some other these pets. So what they did, they are getting some donations. That is their one kind of a revenue source. Other source of revenue, what they built up over years is they were selling the milk. So this is one of the revenue stream. So one revenue stream example is this one. Second example is there was one NPO who was having some blinds as their beneficiaries. So the blind people were staying there, were having the accommodation in the NPO, accommodation, habitual things. Now what they did? So can you think how a blind can be a revenue model for NPO? Now what they did? They engaged this blind population for virtual e-learning. So those blinds were teaching history as a subject online. And for this purpose, they were earning revenue. So depending upon the business model you are having and depending upon what resources you can check out from your own business model, you can have some revenue streams. Like if I say we have this, Tihar jail or many other prisons for that matter, what they do? They manufacture papad. They manufacture, this cloth bag also. So these can be the revenue streams. Other thing in this question was how to align short-term needs with long-term sustainability. So this is a very vast question for a reason. This needs to be analyzed with the help of your working capital management. For this purpose, you need to have a good financial reporting so that the financial report can tell the users and maybe the consultants also what is your long-term need and short-term need, what is your long-term source of funding and short-term source of funding. Depending upon that, you have to take a call. Let me give you an example. The short-term need could be you are having poor children whose exams are approaching in the month of say March or April, and you need to arrange some tutor for their refreshment as a kind of refresher course. So this is a short-term need. Now for the short-term need, you may already have in your kitty. So there is no need to make a long-term planning for that matter. Now, by word of mouth, this message may spread that this NPO teaches students for the purpose of refreshing their memories about the subject. And maybe many people may start coming in. Then you need to make a planning that 5 years down the line, what I project about the number of students. Now, what these students are, not only my students who are orphan maybe, but other students also. So that whole depends as to what your vision and mission is in this very case. Depending upon that, you have to take a planning and strategy. The other question is what are the potential benefits for non-profit organizations in listing on social stock exchange? So the foremost and the prominent benefit is transparency. The second benefit is wider approachability. For example, Mitulji is in Tamil Nadu, my NPO is in Delhi. Mitulji and me may not be in a position to meet and greet each one for the purpose of donations. Now, what Mitulji will do? Mitulji will log into the SSE, Social Stock Exchange, and just like he purchased the shares of Reliance Industries Limited as an investor, he may buy my zero coupon, zero principal bonds as again a donor. Same way Raviji is in Bengaluru. He may not be in a position to meet me and greet me, and I may not be in a position to meet him and greet him. But I need contributions. So I don't know where Ravi is. I don't know where Mitulji is. So what the contributors will do? What the contributee will also do? We will approach a common marketplace, and this common marketplace should be, recoined as a new word, common meeting place of both the donors and the donees, and thus obviously wider the market, wider the receivability also. That is supermost benefit. The other benefit is impact assessment. If Mitulji is donning me, Raviji is donning me, both these contributors always will want that Kamal should be transparent in ensuring that their money is not wasted. That kind of proprietary reporting can be made when only there's a law to enforce it. And that is what ICDR enforces, social impact assessment. So this is the other benefit of on getting listed on social stock exchange. The prime benefits are three: transparency and credibility. Second benefit is wider market approachability. And third one is impact assessment. The last question which I can see in the chat box is, what are the biggest challenges non-profit face when it comes to attracting impact investment? I would say the two biggest challenges only. Two biggest challenge. One is wasteful utilization. So whatever contributions you received may be wasted. And second is non-utilization. So for example, Mitulji donated me rupees 100. He will be having two things in mind. One is, I paid Kamal 100 rupees, but he wasted. He never utilized his money for the purpose for which I granted. Second is, he gave me rupees 100, but I never utilized. So both these challenges need to be addressed when it comes to impact assessment and impact investment. So Shwetaji, this is from my side. I believe there are no further questions in my chat box. Only these three questions.
Yes, sir. Thank you, sir. Thanks for the insight. Now I request Rajiv ji to give the votes of thanks.
Thank you, Shudha ma'am. I see Rajiv Gupta, Sigasa chairman of CRC, on behalf of SRSB and my CRC office bearer, my colleague. I am really thankful each and every participant for joining this program, and my special thanks to our three resource person, Kamalji. I know before this webinar also, or Mr. Ravi sir and Mitulji, who very well deliberate their presentation on this such type of topic. Or I am more confident each and every participant get their solve their queries or whatsoever doubt in their mind. With these words, I thanks again each and every our resource person. Or in future, we also want these type of webinar or in a member interest will be continuity by the ICI. Or we are very hopeful in future also we are the same take the benefits as today we have taken the in seeing this webinar. Thank you once again, each and every resource person as well as the ICI office bearer. Or my other thanks to Shweta Goyal ma'am, Secretary of SRSB, who really manage these program in very well manner. Thank you, ma'am.
Yes, thank you, sir. Thank you, everyone.
Thank you, sir.
Hope you join the
Welcome,
other
sir.
series of the webinars. Thank you.
Thank you.
very
Thank
much.
you.
Thank you very much.
So Shwetaji, can we log out now?
Yeah. Thank you. Thank you so much. Thank you, Shwetaji. Thank you, Kamalji. Bye.
Thank you, sir.
See you. Bye-bye.